This morning, the consumer price index continued to accelerate, rising to 8.5% for the 12 months ending in March, the largest 12-month increase since December 1981. How can investors fight this kind of inflation? With growth in technology stocks trying to get off the boxing ring mat, we found a nice investment option and we started buying just yesterday. I'm Chase and you've landed on the MOONSHOT Money Channel. Are you ready? Let's go. This is not investing advice. Please do your own due diligence before you invest. Okay, inflation is up, fuel prices are up, food prices are up, our money value is down. China has some strategic lockdowns, the war rages on, interest rates are volatile. What are investors supposed to do? One counterpunch is to buy into a solid company that is not affected by inflation that pays a dividend higher than the inflation rate. Have you heard about dry bulk commodity shipping? How do raw materials like iron ore, coal, grain, sugar, and cement get from one country to another? On cargo ships, in dry bulk shipping containers. Let's take a look at the largest dry bulk shipping company in the United States and see what's under the hood. This company is up 35% in the last 3 months. That's pretty incredible because most of our portfolios have been red over that same period of time. For the 1 year, the prices are up over 95%. That's tremendous. We're talking about a risk-reward value company that paid off almost half its debt in 2021. Specifically, they paid down $203 million of debt. In April of 21, they announced a strategic decision to become a much more attractive value investment, according to their CEO, John Wobensmith. They set out to deleverage themselves so they could pay a very attractive and sustainable dividend. A dividend that can be paid to stockholders in any market environment. Yahoo Finance says the company's forward dividend and yield is 12.66%. That throws a big right hook against 8.5% inflation. What company are we talking about today? Genco Shipping, ticker GNK. Looking at the fundamentals, Genco currently carries a Zacks rank number 2 buy, which means it is in the top 20% of more than 4,000 stocks that they rank. The price as of this filming is $21.80 per share. The PE ratio is 4.95 and the market cap is just under $1 billion. The price sales ratio is 1.65 and the price book is 0.97. The CEO stated in a recent interview that there was not many new cargo ships coming online for shipping, and the commodity demand will continue to outpace new ship production for the next 2 years, which will continue to raise ocean freight rates. Also, with the Ukraine and Russia situation going on, shipping dry bulk from those countries has really slowed or stopped, forcing the other countries to produce more, and that causes greater miles to travel, again, driving up the rates. We are all consumers, so this is just meaning higher prices at the stores for all of us. So to hack inflation, we're buying Genco, just like we did Chevron and Exxon before the crude oil prices spiked so hard. Genco Shipping is a low-debt, high-dividend value company and a very important piece of the supply chain. They are a first-class, United States-based company with a very seasoned management team. The second half of this year may begin to see more construction and building, which will demand more iron, steel, and cement. That is very good for Genco. On the ESG front, environmental, social, and governance, Weber Research ranks them number 1 according to Mr. Wobensmith. Check out Genco Shipping and Trading to see if this investment makes sense to you. Speaking of dry bulk commodities, this next video is about a secret agreement between Tesla and a nickel mining company that also carries a super nice dividend. I'll see you in the next video.